Okay, so we're going to run through this part of it really quickly because I think a lot of you know what happened in the 2012 session, but just to kind of set the stage for the conversation about 2013, I want to get us all on the same page. So going into the 2012 session, this is what was on the legislative agenda of the Virginia Housing Coalition and the Virginia Coalition on Homelessness and Housing Opportunities Made Equal, a number of our Habitat for Humanity Virginia, a number of our legislative partners. We had a common agenda that was pretty lengthy and included all those issues. And let me just real quickly go through what happened. Of course, we've talked about the Housing Trust Fund. We had a number of Housing Trust Fund bills introduced. They all ended up getting rolled together into HB 121. We had a great, exciting evening session over at the General Assembly in House General Laws. And we got the bill out of subcommittee, and we got the bill through the full committee, which was no small feat in a very conservative House. But at the end of the day, that bill was sent over to Appropriations, House Appropriations, where it died, a unceremonious death. However, then about a week later, Deus Ex Machina from the heavens descended the the National Mortgage Settlement Funds. And those of you who followed this may know that Attorney General Cuccinelli went to the General Assembly, said the state was going to receive $65 million in mortgage settlement funds, that it was completely up to the General Assembly as how to use those funds, although he suggested that perhaps some of them should be used for housing, but that was as far as he went. And in the settlements document itself, if you go look at it, every state attorney general got to designate how those funds could be used. Many state attorney generals said should be used for foreclosure counseling, should be used for foreclosure recovery, blah, 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 blah. Attorney General Cuccinelli said the funds should be used for any legal purpose that the General Assembly determines. And so we were fighting a little bit of an uphill battle because throwing $65 million into the General Assembly during the middle of the budget process is like throwing, you know, what? So the feeding frenzy took place very quickly. The money was allocated. Yes, Ben?
Didn't the Attorney General actually say very clearly the funds should go for housing at first, and then when that was before Senate Finance, and then he went to Senate House Appropriations, he softened that and made a very different kind of
Well, his presentation before Senate Finance was, he did talk about housing, and I think I wasn't there, but were you in the room when he did that presentation?
I heard from others.
Yeah. Were you there, Shay?
Yes.
Yeah. What I heard he said was, these funds should probably go for housing, which
he did suggest that
certainly a reasonable thing to say, given that this money came out of the mortgage zone. But that's not what happened. So the General Assembly pretty quickly allocated these funds into other parts of the budget to fill budget gaps, and there was some speculation about where it was going, aid to local government, here and there. And just this, what this shows you is, that, you know, this was a $25 billion settlement at the national level. Just a small piece of that went to the states. Most of that money ended up going back to homeowners who were affected by foreclosure through the directly with the banks that were parties to the settlement. So Bank of America, for example, party to the settlement, they have a certain amount of money, and they're working with affected homeowners here in Virginia right now. They're doing some modifications, they're doing a little bit of debt forgiveness, mostly modifications, etc. But there was some money that came to the states, in our case 65 million, and that was really, could be used for any purpose. As I said before, we started a very quick campaign, mostly electronic, got people to get involved in this. And eventually, through some luck and proper having people in the right place at the right time, the Senate did agree in the budget as a part of their budget negotiation that extended beyond the end of the session, putting some money into a housing trust fund as a part of the Senate's plan, and the House eventually agreed to that. And we ended up with $7 million out of 65. That's not a lot. So we'll talk more about how we preserve this upcoming. Okay. Foreclosure reform. We had a ton of bills that were introduced in foreclosure reform and dual tracking, which is basically doing modification and foreclosure at the same time within banks, which is a little self-defeating. Track down foreclosure fraud, require re-reporting of sale of mortgages by the lender. There's some robo-signing stuff. All of these bills got killed. There was very quickly, and banking lobby was very united and strong on this, and we just were not successful in getting any traction on foreclosure issues. So those may come back. Predatory lending, kind of the same story. There were bills, very reasonable bills introduced. Cap lending at 36%, you'd think that might be high enough rate of return, but it was not. All those bills, those predatory lending bills were killed. All right, victory. We had some bills introduced on blight. Some of you have heard about this receivership bill, which did pass. It allows localities, and this is a sort of a watered-down version of what some other states have done with receivership, but at least we've got a start here. Localities in Virginia can now act as receivers for blighted property and essentially take equitable interest in those and make improvements to them and cause liens to be placed on those for the cost of improvements. So that bill went into effect, was signed by the governor. And Thibault celebrated this event with us, as did other members of the General Assembly. Your local delegate. Okay, so landlord, and so we should see, I don't know if this is an issue in Charlottesville or in Almar, whether local governments here would consider taking advantage of this and coming in the case of blighted properties, using this new feature and acting as receivers. We certainly encourage that. Landlord-tenant, we did make some little bit of progress here. Just some things that I won't go into the detail of it, but things that are eminently reasonable, and I guess for that reason we did get those all passed. SAFE Act, which allows nonprofit organizations to be exempted, that bill passed, and I think to some extent that was a little gratuitous because I think federal law had changed. I know, Jen, you were going very much involved in that. But at least we've got it on the books now. Anti-UDA bills. So UDA's urban development areas, this was a part of the transportation bill that was passed many years ago now. And essentially from our perspective required good planning to happen that would take into account growth and create higher densities, good transportation planning, ultimately good mix of housing types and affordability types. Unfortunately, bill was introduced to make UDAs voluntary. That bill passed and was signed by the governor, so UDAs around the state are now voluntary. Probably not an issue for you guys because you all do the right thing and you're probably doing that really good planning now. Eminent domain, you know, this train has left the station and is roaring down the tracks. We have a referendum this fall. The eminent domain has passed the General Assembly twice.